points from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in at January 27, 2022, and Jerome Powell just choked. Yes, he messed up. He dropped the ball today. It was absolutely insane. If you were watching it during the day, when the Fed report came out, everything was fine. It was fairly neutral, but then literally as he started talking, it sent the market down, and somehow the NASDAQ barely closed green, but we were up over 2.5%. So another one of those historical shifts, but I'm going to give you the full breakdown of what happened today. But just to give you an idea, today was absolutely huge, but for comfort's sake, it wasn't that bad because we have seen something like this. So pretty much this meeting so far to this point was just as bad as last December, but every single one of these pretty lines up until then, those are all the other Fed meetings, and pretty much today, besides last meeting, has been one of the largest reactions. Now, you've also probably heard me talk about what the Fed futures are and the market expecting, but after today, this is going to come up a lot, and now we'll go over it or ask me about this on stream. Essentially, if this thing starts running and you start seeing the futures move, it seems as if Powell is willing to let a lot happen. So that may not make as much sense yet. We're going to go over that, but I do have to start with the pretty picture and what this is showing you. Again, for context sake, to see what you got, it was overall a 2.5-3% move today. This is showing you the average reaction of Fed releases since 1994. It's usually positive. Even if they've raised rates, it's been positive. If they've held the rates, it's been positive. And then if they cut, it is usually bullish. So hopefully all of this volatility is telling you something. What we are going through is very, very big, and there is a lot of implications. So we got a lot to talk about. I'm going to go over everything that happened in the market today. The plays that we made a couple. Some of them got washed, but some of them did very good. Again, the option premium was absolutely insane today. Then we have some earnings plays, and then what we're expecting for the rest of the week. And I do have a prediction, so I hope you're ready. But right off the bat, big shout out if you're liking the video, and big shout out to everybody on stream today. We will be there live tomorrow, youtube.com/thestockmarket. But thank you for all coming and being positive today. Again, it was historic. But to get into Powell and what happened today, he did not pivot from what he has been saying. Pretty much, he said the exact same thing as he did in December, but his approach to the market and even how he conveyed it, his communication, I mean, it seemed very hawkish, but after we get to some of these quotes, some could argue it was very purposeful. But pretty much all of the carnage today, it started in order. I'm going to go over all the direct quotes. It was one after the other. Everything was good. Again, if you come here, this was when the release came out. It was initially kind of dovish because he said soon for the rate hikes instead of next meeting, and then nothing really changed. But right here at this little pop, this is when the press conference started going down, and then it popped, and then back to back to back, he said three specific things, and then that's where all the carnage happened. So the first thing he said, and this one may come back to haunt us, you will probably see this a lot, but he said, quote, "I think there is quite a bit of room to raise interest rates without threatening the labor market." And this is kind of in direct contrast. Remember, they've been saying we're waiting for the employment figures, we're waiting for the labor market before we raise rates. This is very contradicting, and even then, a lot of people pointed it out today. He kept saying there's uncertainty, but then he would also say something where it's like, oh, the labor market is strong, but they're still uncertain. So a little bit of double speak there, but for the most part, this one right here, this was the first shock of the day. And again, you will hear about this one in the future. He's essentially saying, yeah, we could raise rates a lot and we're not really worried. That is not what the market wants to hear. But then as he got into the next questions and then the next answers, this is what he said next. He said he is willing to move sooner in reference to the quantitative tightening, the balance sheet reduction. And then he said perhaps faster than the last time they started shrinking the balance sheet in 2018. And even last time you did get a taper tantrum. So by this point now, the market is already going down. We lost the gains, and then you're getting all of the volatility. And then this one right here, here, this one was the dagger for me. So a lot of people in the market are focusing on this quote, but this quote right here, this is the one that got me. And he pretty much said the market is pricing in a number of rate hikes and balance sheet contraction to start later this year. And he says that we feel like the communications we have with the public in markets are working. So in essence, with that statement, he pretty much validated every single thing the market has been expecting. So remember, we talked about it yesterday on the watch list. Even the Fed members themselves, they are expecting 3 rate hikes, but now there is some market participants and even now the Fed futures that are pricing in above 4, and he didn't try to refute that, and he said our communication is working. The market is expecting what he said he was going to do, but he didn't really touch on the degree of it. He did not even confirm the March rate hike, even though most people pretty much price it in. He still did leave a lot of optionality, and we're going to talk about that. But the fact that he addressed the market, how it's been going, and all he had to say was, yeah, it's working. The market's getting our communication. This is the really, really big shift from Powell that I'm seeing. So, like I said in the beginning of the video now, if he's willing to communicate and likes what he's communicated in the response so far, all of these Fed futures are going to be key. And now these are 2 things to watch for. What you'll notice when you look at all of the Fed futures, they go up by about 0.25%. So you can see that right here. It goes up by 0.25%. But now the next worry, and if the market does this, we're not going to hear from Powell for 3 months. That is the key, or 2 months, a month and a half. But essentially, if the market starts pricing in a bigger rate cut or a bigger rate hike, of 0.5 basis point, that is not going to be good. And then now, if the Fed futures start to go off the charts, we may very well start seeing 5 to 6 to even 7 rate hikes, because there is a lot that is already being priced in. Again, I think we're working on the 5th rate hike being priced in through the Fed futures right now. So it is a overall wild scenario. Again, he did have to say a lot. You see the pretty picture, but we said this a lot today. Pretty much Powell was very ambiguous, and he just seemed more hands off on the market, and he wanted to literally hand it off to the market, or at the very least his flexibility or this optionality that he's leaving open. It was just viewed as very, very hawkish. Even myself, I could take it kind of hawkish, because I'm like, man, Powell, do you not see what they're pricing in? They're gonna go crazy. But essentially, man, everybody up until this point with inflation and all of that, everyone keeps saying that the Fed is behind the curve, but it kind of looks like after today, he's willing to kind of let the market decide where they think things should be. So essentially, with this difficult of a situation, my opinion, I think Powell is just coming to the conclusion it's better to let the market start pricing things in, and if he comes in shorter since they're overpricing, that would be better than him saying transitory, and then everybody thinking he's behind the curve for the next couple of years. So we'll see how this strategy pays off, but his hawkish statements or anything he said today that could have been interpreted hawkish, it was strong, and I don't think the market will hesitate to bring this up at a later date. So keep that in mind. Now, as far as what I'm expecting, I mean, I'm going to make my prediction here. It could be wrong. We'll see. And again, I said this today, just be prepared for a lot of opinions to change. There is a lot of volatility, and with Powell leaving things up to the market, it is really going to be dependent when all of these hedge funds, analysts, and even retail, there's going to be a lot of back and forth, and people are really going to start pricing things in even more, but you're probably going to see more flip-flop than you have ever seen in the last couple of years, or at least until the pandemic first started. But as far as my prediction, I think we are going to chop a little bit lower. I think there's some more downside. I don't know how limited it will be, or at the very least, I think it'll be very, very choppy, and then I think we'll do that until we get into next week, or until some of the earnings could kind of support it, and then I think we'll be okay and maybe get another relief bounce. But then I think the markets are just going to freak out again once the minutes come out, because essentially the statement wasn't bad today. Powell was the one who dropped the ball, but I could only imagine what the minutes and everything else sounded like, and really that's the last time we got the freak out. So that's what I think is going to happen. And then, like I said, the next meeting is not till March, and with Powell being very ambiguous, there is a lot of questions that are unanswered, so just get ready for volatility. But coming into the company news and events now, the first thing I want to highlight, because we were just focusing on Powell, you still do have a lot of data coming up tomorrow, and like I said yesterday, there is going to be a lot of continuation moves. So tomorrow you are getting jobless claims, durable goods orders, and the United States GDP, and then Friday consumer income and consumer sentiment. Those will actually be important, so watch out for that. Then coming into earnings here after hours, there was a couple of them, but the two big ones, Intel, they beat on their current numbers this quarter, but they guided down and it was not looking too hot, and they erased a lot of the gains that they had. And then Tesla, they actually did surprisingly good, but it hasn't been the same growth rate. A lot of people are going to nitpick at that one, but the supply chain comments that were made, they said it was going to be affecting them for 2022. That was taken negative, but the stock did bounce during the conference call, just like Microsoft yesterday. And even then, Microsoft opened up like 4 or 5% this morning, so we will see where it's at tomorrow. But there was that. And then this news is actually pretty big. We'll see, especially as we get into the midterms here, but Supreme Court Justice Breyer, he said he will be retiring after this current term, and that is right before the midterm, so this might even heat up the politics. But again, midterm years are usually more volatile than not. You might even see a top to bottom 18% trough, as we've seen in other midterm years, so keep that one in mind. And then to Ukraine, we got another update today, and people were even saying how Secretary of State Blinken, that could have been an event. We listened to it this morning, but the situation is getting very, very weird. So last night, this morning, the Ukraine defense minister, he sent out a statement saying stay calm and that they do not see a sign of an imminent attack from Russia. But then today, even with Blinken, the United States has reaffirmed the opposite and saying, no, get out of there. We'll pay for it even if you need to get out and all of that. So seems like we're going to get a lot of back and forth. And like I'm saying, just wait till more of the end of the Olympics, and that's where we may really start to see another development. Otherwise, we will get a bunch of back and forth. And surprisingly, this time, the markets are kind of picking up to this. And even Powell did make one reference. It wasn't in the FOMC statement, but after one of the questions, he did bring it up. So keep that one in mind. And then finally, this one is based off of old news, but there is a research report now that China sellers are turning to Walmart Marketplace. And this was after Amazon decided to ban like 50,000 or 500,000 of the accounts there for like fake reviews and all of that. So it seems like they have found a new home in Walmart. So we will see what happens. But very non-straightforward day. There was a lot of confusion. We said you're in the middle of peak volatility. It is probably going to get more crazy, and pretty much till the end of the quarter, it is really going to be no man's land for a lot of what we've seen in the market here. There is just a lot of unknown, and now we get a little bit of freedom granted by Powell, so I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 5 different plays that I'm looking at coming into tomorrow. I made a lot of plays today, but it was really a mixed result. Half of them did good. A lot of the post-earnings plays got absolutely washed. We'll go over them, but I still do have a lot of ideas, and like I'm saying here, we're probably going to get to string together a couple of weak moves, and you still have earnings. So now with Powell out of the way, it's a little bit better. There will still need to be digestion, but now the main focus will definitely be on earnings. So first play, it's not a upcoming earnings, but post-earnings Boeing. We made a play on it today, and I grabbed puts, and I'm holding some of them still, but I will be looking for the off chance of a post-earnings news like they've done in the past. So they went down today. Even the CEO, he tried to explain it on their earnings call. It was kind of interesting. It was not a good earnings, but we have seen it in the past where a couple of days later, they come out with some breaking news, and it kind of gets a little bit more volatile. So I may even be looking for calls. Again, we grabbed the puts, but Boeing, I think, can move a lot, and it is at a very, very key level. So keep that one in mind. That is the first play. Coming into the second play, Deutsche Bank. I really like this news, and the best part about it, it may even be good for shares, but they announced that they're bringing back their dividend and that they're going to be doing a buyback. So all of this is good news. Again, they've struggled as one of the bank stocks, and even then, just go look at the chart for Deutsche Bank. It is not good at all. So I'm a little hesitant towards it, but I made a small play. I put like $170, $200, but I made sure that it had time because this one might take a little bit longer to move. And then on top of it with the Fed, I was like, all right, I could get a call there for the banks. So as far as the play, nothing too crazy with it. I grabbed the April $17 call, so they are very far out of the money. The thing I liked about it, again, I got a decent size of quantity. I got like 30 contracts at 7 cents a pop, and you can see here, 7 cents is literally, this thing hasn't moved at all. There was news, the contract was already pinned. I was like, all right, I'll take it, but the other contracts are a little bit crazy with the spreads and all of that, so this isn't a safe play. It could quickly die down, but if we do get a longer term kind of bounce or people like this news, another value rotation there in the banks, I think this one might come back to life, but it's not going to be anything too crazy. But that is the second play. Coming into the third play now, I decided to go for the double dip on MSTR, and really I like this for volatility with the market. Essentially, if the market goes down with the correlation, these go down, it goes down a lot, and this thing can move big. So that's what I like about it. And then on top of that, it gets the exposure to Bitcoin and all of that, and I think it might cover earnings. I'll have to double check. The thing I don't like about this one is that the spreads are very, very wide. So if you've traded this last time, you've noticed it's probably literally a 50%, 100% spread in terms of the valuation. So that is the only downside. But the reason why I bought it is essentially I was able to get more time for the same strike price as the play that we got the other day. So remember, we made one of these flips. That's why I'm saying the double dip. Now I was able to go to February 18th instead of the weekly. Got the literal, I think the same strike, give or take a couple of bucks there. And then I spent the same $280. So only grab one of them. I thought this one would be an interesting play, willing to take the risk, and then allowed me to get some put plays while the market was been bouncing. So if any volatility comes back, we'll be good. But there was that. Then IWM totally got washed on this play. This one got clapped down 50%. I went kind of big. I pretty much took it as a lotto play, and my idea here was Powell was going to come in dovish or better than expected. I thought you could have got a really, really big bounce, and why I went for IWM, we went over this, essentially based on the strike price that I got, I was essentially able to get a cheaper bounce play than playing the SPY. So I grabbed the 245 contracts. I bought these at 13 cents. I bought 100 of them, so I spent like $1,300. I think I spent 12 cents, but either way, it's down 50% just after the volatility today. But take a look at the IWM. The high was like 242, and you were able to get something near the highs for about 12 cents a contract. So now if we come to this SPY, I showed this one earlier on stream. Again, this was for March, so it does have a little bit of time. But then if we come up here to the previous high of like 475, even like 470, you'll see the same contracts around anywhere in this range. You're going to spend about $1. So they should move in tandem, and obviously the S&P is double the size of the IWM or even more. So that's something that you have to factor into it. But for the end of the day, the IWM is cheap, and even if you look at the PE ratio of the IWM, it is now as cheap as it was in March 2020. So keep your eye out for that. That was the third play, and then finally, or that was the fourth play, coming into the fifth play, TBT. So you saw TLT move today, and it did go down, and pretty much TLT going down, that goes really in line with balance sheet reduction. Well, that's what we saw at the beginning of the year. So as long as this isn't a false move, we may very well get a continuation, and this may be enough fuel to break that range in bonds. So we talked about this a lot. Here is that bottom range on the 100-day, but when we pull it out, again, here is the yearly, and this is where we broke through last time. Again, as long as today wasn't a false move and the market kind of sticks to this idea and the bond market doesn't go crazy, or even then, even if the bond market wants to price in a lot of stuff, this may be the catalyst to see it go down. So the old TBTs we have, they held their value. They didn't really go up too much, but if we do get a big move, those should start to do some work for us. So we will see what happens. But those are the main plays. As far as everything else, I made a couple, and I want you to see what happened here. The first one that I did in the morning, I went for the Boeing puts, but this one was wild. I got filled at 9 cents. So I'll show you the chart. I ended up selling half of them out at 25 cents, got my initial investment back, plus additional almost 50% on that, and then I got to hold the remaining 15. But this one was just a fat finger, and you'll see it with the rest of the contracts today. I don't know how I got filled at 9 cents on this. Literally, I was the fat finger at the bottom. You could literally see here in the morning, they were even going at like 20 cents the day before. So I woke up in the morning, I looked at them, I spotted it quick on the chain. I didn't think it would fill me, but it ended up doing it on big quantity. So we ran away with that one. That one was absolutely insane. But that was the first play, and then the quick quickly go through the other one. I lost. I did 177 on a daily. Again, this was during the first bounce here during Powell. I said, okay, the initial statement was pretty bullish. I didn't think Powell would drop the ball like that, so I went for a small daily play. These ones got washed 72%. Then I made an Abbott post-earnings play. This one went up for a little bit. Post-earnings, again, kept it small, only $150, so thankfully we went bigger on the Boeing first, but these ones got clapped 30%. Failed earnings play, the MSTRs, those went up 36. The Tesla put, I added to these. I said I was going to play Tesla. They went up for a little bit. These ones we're going to see tomorrow, especially after that move, but essentially it's going to be like Microsoft with that volatility kill. So there was that, and then I averaged down on another February 18th instead of the weekly for TXN, but post-earnings play down 40%. This one went a little bit bigger, but for the most part, none of the post-earnings plays were there except for Boeing, and if I didn't get lucky on that first one, it would have been challenging. And then, there was a Microsoft too. I forgot about that one. I even went for a Microsoft call, and that one went down 50% as well. So the premiums in the morning, and I think it had to do with pretty much the big gap up that we had. We had a big gap up. A lot of the premium was kind of juiced into every chain. I think it really did make a lot of these post-earnings plays a little bit harder, but there was a couple that were able to survive. So those were the main plays. As far as everything else, I'm going to be watching Tesla tomorrow. Post-earnings, LRCX, they move big. We'll see how it plays out, especially with some of the other chip makers. Again, watch out for Intel. This one is going to be interesting just because of where it puts them out on the daily. And again, they have had a very interesting history, to say the least. So when you pull that chart out, we're going to see where they go tomorrow. But Broadcom, they were a real winner. They slipped a little bit, but this is a very, very big gain. So watch out for them tomorrow. See if they continue any of that. MSTR, going to be keeping my eye on them. STX, they had earnings. They did good. They had a drop and pop, so watch out to see how that plays. Deutsche Bank and even any of the banks, watch out for them. Airbnb and even Uber, just some of the travel names. Uber did a little bit better there at close. They were really, really woken up today. So again, their earnings are right around the corner. Keep some of those in mind. And then even Abbott, I made the post earnings on this one. Somehow it said they were green, but they were a little bit more negative when we got the play. That's the interesting part about this, but keep your eye out for them. Again, their earnings was more of a mixed bag, but negative reaction. And then Amazon and Facebook, these are going to be the two to watch right here. And don't forget about Apple either, but these ones have been lagging pretty hard. Again, Facebook and Amazon, they have been making some wicked drops leading into this. So I think these earnings will be very key, and they've moved the most, but the contracts are a little bit subdued. So watch out for that. Then TLT and the dollar, it's very simple. We're either going to get the catalyst to go down. If this isn't a false move, we should probably see TLT and the rates start to go higher. Otherwise, wait for the digestion, and we'll see if it gets us in a range here and kind of recovers. Other than that, though, it's time for round two, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember every change makes a shift, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.